something that we didn't go over in the webinar, but it is a tool that you can use for those who like the trend system. I think we may have gone over it, I can't remember now, just touched upon it, but didn't really delve into it. And after the down day yesterday, I was taking a look at some of the issues that I am trading and looking at for breakouts. And you can see one here. Let's just dive right into the CFG. In the breakout, and I'm going to go over the others quickly, but we'll take a little time on this chart here. I have a 50-period moving average, my trailing stop, and as you can see, let's go back to when we would have got into this. You would have been into this on, let's see, 726 was the time for the breakout at $21.99, so let's call it $22. That would have been your signal right here. And the breakout signal is the highest high in the past X number of days, and this is the lowest low in the X number of days based on the software. So that's just giving us a little look at the trigger. Now, if we're in an uptrend, obviously we're not going to use this, we'll disregard. But you can also look at this. If you miss the entry here, there are a couple ways you can get in. One is, if you notice these green dots, those are a re-entry point. So if you happen to do a scan and we're in the software anywhere in this area here, what you could do is you could look at the re-entry point here and then jump in. My suggestion is to jump in at the one tick above the high of the re-entry candle. Some people just jump right in. And as you can see in this case, if you did jump in at this point, and let me just go over this. So the open is 24, actually the next day. So the open is 24.62. There's two places to put your stop. One would be 23.78. So you're risking about $1 a share on this. And or the better one that I like is the 50-period moving average, 23.14. So at best, you're risking $2 a share. So again, based upon how much you want to put in each issue, your risk tolerance, your stop, if it's 8 or 10%, you can figure out how many shares you can buy and you can get in. So you could have got in any one of these areas. Then if you were watching it and are uncomfortable with this, you just look for the next highest high of X periods, and this is going to denote it up here. So you would be jumping in right here at the 25.59 area. That being said, assuming you caught this somewhere in the beginning, you would have gotten out at the exit right here at 34.12 would have been your exit. You can see your little exit sign here. A couple more areas to get in. You can see we triggered along here. We triggered along here. Now, looking at this and being in the bull market we had been for so long, you can look at these here and, maybe try to get a re-entry, wait for another re-entry here to get a better price and in. Needless to say, any of these entries here, you would have got out with a small loss, small profit, because you're going to keep exiting. But what I wanted to hit upon today, in looking at a number of charts, I'm going to flip through some and go ahead and do this as you may for tomorrow, is they have all turned over. They're all trading below the 50 EMA. They've broken that. They've all had signals that it is, a few days ago, the lowest low of a period. Now, let me open this up for you a little bit so you can see it. So actually, here it is. That would have been the trigger, which I wouldn't have taken a short unless we were below the 50 EMA. So my two constraints are, if we're turning, is going to be, short would be below the 50 EMA and below the trailing stop, which we wouldn't have gotten this till 2 days ago. If you'd have been lucky enough and wanted to take it then, obviously you'd have had this nice down day yesterday, and that's what we'd be trading today. And I just want to throw out to you as an idea to trade this, there's a couple ways. One, we are below the 50 EMA. You could put a resting order, a limit order, 36.39 to get in. And if it closes above the trailing stop, just immediately get out. That's one way. The second way is you could, if you saw this, is just jump in tomorrow at the open, and let's assume it's 34.50. You know, you're risking, what's this here, 36.31. You're only going to risk about $1, and just to be a little more comfortable, let's just say $1.50 a share in case it closes a little above. And you could jump in this on a short. And that's one theme that we're going to have in general on these next few charts. And let me see if I can bring these up for you. But they're all going to look the same, all going to have entries, and just a piece that I would like to pass on to you. These are a couple names. So let's go through the names. CFG is one of them. And we'll just quickly go through these charts. You can see they all look the same. Below the 50, below the trailing stop. And the biggest reason was yesterday's big drop, and you can see where it's trading today. So RDN, let me just go with the symbol. So RDN, CFG, EWBC, similar chart, SCHW, below the 50, there's the stop right there. TCBI, Texas Capital. We can see here, let's see what else. I thought I had another one. Nope. So that's it. I thought I had an AL. Windows. No, it looks like we got them all. So there you go. There's a couple issues that you can take a look at. I thought I'd do this short video for the toolkit that I have. This is something else that we can look at. And I'll be having a webinar to go over these issues, to take you step by step through it again, coming up in the next week or two. And those are for all those clients who have subscribed to the Inner Circle, and you'll get the daily alerts to know not only these when I come across them, but I try to concentrate more on the Mechanical Monkey, on the stochastic. Right now we're treating the stochastic RSI, and we're already in 4 issues from 2 days ago. A couple shorts, I believe, and a couple longs. And I'll keep you posted for those, and have a great day. Best in trading, and I'll see you next time.